The Pro Show is brought to you by Rockin' Media and our proprietary Flash HDR photo process, providing you with the best, most realistic photos of your property. See the difference at rockinmedia.com. Hi, and welcome to the Pro Show. I'm Rick Machle, and unless you were under a rock, you probably heard about the settlement that the National Association of Realtors had with a number of plaintiffs relative to how buyers agents were going to be compensated going forward. Well, there's still a lot of questions about that, whether you're looking to buy a property or looking to sell a property. So we're going to get into that quite deep and give you all the answers, hopefully, that you have going forward. In addition, we have a couple of great properties. Nancy's going to be talking about mortgages, and Greg's talking about rentals and whether you want to invest in rental properties and how to make those decisions. That's all next on The Pro Show. On today's show, we are going to be talking about a topic that is confusing, I think, a lot of people. So we're going to get clarification on it, and we have a special guest, Chris Luchin. But before we get to him, I want to talk to Rebecca Fine, who is new on this show. Hi, Rebecca.
Good morning. How are you?
I'm doing well. Rebecca's out of the Coldwell Banker Denver Central office, and she is awesome. She also does a ton of stuff up in Grand County and has a bunch of listings up there. That's where she does a lot of real estate. Tell us a little bit about yourself. When did you get into real estate?
Well, it'll be 30 years in May, and I love selling real estate. It's such a fun job, and it's so great. I know we're going to be talking about protecting our clients today, and that is the most rewarding part of our job, is really helping people out.
And you have a place in Denver and up there, or just up there?
In both Denver and Grand Lake. So I've had my second home in Grand Lake just as long as my properties in Denver. So I love it. It's such a great place. I know most folks have been up there. I know you have, Rick. Thanks for coming up and doing the best photography ever for us.
Aw, shucks. And we also have Camelia Corey on the show again. Camelia, hi there. How are you?
Doing great. Thanks, Rick.
How are things going in Colorado Springs?
Things are going great down here. The year started off with a bang.
That's great. Awesome. And we also have a special guest, Chris Luchin. He is actually the managing broker in Colorado Springs. So he's Camelia's managing broker. Good morning, Chris.
Good morning, Rick. Thanks for having us on. I appreciate it.
It's great. So, Chris, tell us, what does a managing broker do?
The better question is, what does a managing broker not do?
Okay.
Sometimes you got to take out the trash.
Yeah. So do you help keep agents, on the right track? Is that one of your roles?
That's one of my main things, Rick, is help guide the agents, keep up to date on what's going on in our industry, make sure I'm readily available to help them with contract questions, all things real estate.
Okay. And so keeping along those same lines, it's great to have you on today. Let's get started. Every week we have Nancy Alexander from Smart Mortgage Services, and Nancy's joining us from up in the north part of Wyoming. Hi, Nancy.
Hi, Rick. How are you, sir?
I'm doing good. Thanks for joining us while you're up there. It's always great to have you on. And today we are talking MIP, Mortgage Insurance Premium. What is it?
MIP is a insurance that was created back in the early 60s, I believe, with a gentleman that wanted to help people that had less than 20% down. At that time, the only mortgage you could get was an FHA if you were putting less than 20% down, because the government gave you or backed the insurance of that less than 20. So mortgage insurance premium is a insurance that is for the lender.
Okay.
Not you as, we always think of insurance as something that protects us.
Yeah.
Right?
Yeah. But it insures the lender. So if you default, they're covered?
They're covered. Exactly.
Okay.
So,
But,
and then mortgage insurance, Rick, you and I were talking that it goes in these incremental spots, right?
Uh-huh.
5%, 10%, 15% down. At 20%, you don't have it. So that's why we tend to go 95% loan to value, 90% loan to value, 85 and then 80.
So it's not what I owe to get me out of it, because once I hit 20%, right, I can
Right.
drop the mortgage insurance premium and save that cost, correct?
You can on a conventional.
But it's not what I owe.
It is not what you owe.
Okay, so if I paid off 80% of the loan, that would definitely cover it if we've had a increase in value, but it's really loan to value, correct?
It is. You're spot on, and it's the combination of the equity that it gains naturally by owning real estate and what you're paying to the principal balance with each payment that gets you to that 20%. So, we'll talk. I think you and I were talking the other day about if real estate is gaining at 8%, let's say, and you put 5% down. So let's say 8% per year. That's 16% in 2 years. You put 5% down. You should be at that 21% down or 79% loan to value to drop the MI.
Okay, but how do you get rid of that? Do you have to get a whole nother appraisal, or how does that work?
You do. You do. It's a great question. You get a hold of your servicer, so the
Okay.
individual that you're making your payment to, tell them that you believe that you're at the 20% equity piece or lower. And in turn, you would like to challenge that mortgage insurance.
Okay, and is that a cost you'd have to absorb as the homeowner getting that new appraisal?
It is. It's a cost for the appraisal, typically $500-600, depending on where in the country you are.
And typically, does it take time to figure out that whole process? And then are you paying also your service provider to redo all the, paperwork, or how's that work?
No, that's a great question. A service provider actually submits to the MI company. MI companies are independent of lending.
Okay.
And so they're a third party to a lender or to you and I as the consumer. So once the investor says, yes, indeed, the value is there in the home to not carry the MI any longer, then the third party, i.e. the mortgage insurance company, is contacted and the mortgage insurance is dropped.
Okay. Well, that sounds like it's a good thing to get rid of, because you're just paying for something that isn't covering you anyway. So if you if once you get to that 20%, work to get rid of that, because you're just paying money for nothing at that point.
Yeah, you have to. It's just imperative to be aware of it. And mortgage insurance, Rick, isn't my mother and your mother's mortgage insurance as it used to be, right? It's not outrageously expensive if you've got the good credit scores.
Right.
You would be really surprised with the good credit scores that it's $40 a month, it's $60 a month. Does that then come into your strategy as to how much money you're putting down?
Right.
You may have 20%, but do you want to go in at the 10% down, pay the mortgage insurance for a couple of years to save the money, or wherever you have that money, let it continue to earn the interest it's earning? Just a thought.
Yeah. But once again, want to keep those credit scores high, because that also impacts that mortgage insurance premium as well. Because obviously, the lower your credit score, the more risk the insurance company is taking on. So they're going to charge you a higher premium to cover your bank or your lender.
You're right. You're spot on.
Wow. So next week, I think we should talk about if you're starting to run behind on your mortgage payments. What are strategies that you really should do, and is the ostrich approach the best approach? Putting your head in the sand. So I'm guessing the answer is no. Okay, but we'll go beyond that next week. And if you want to talk to Nancy about whether she can help you out with your mortgage insurance, or getting that next loan, or helping you to finance or refinance, please reach out to her at the number on the screen. And as always, appreciate you being on the show. Thanks, Nancy. One of the decisions you have to make is whether you're going to pay your as a buyer, your buyer's agency agreement, or if you're selling your home, whether you're going to pay that buyer's agency agreement and how that works. So we're going to get some clarification from Chris. And so Chris, let's start out with I'm a buyer. What has changed between now and when did this take effect? Like August of 23, something like that?
Well, it took effect in August of 24.
24. Okay. Last year.
And it was last year.
Okay.
Prior to that, it was typical. Now, it was typical to see a buyer agent compensation advertised on the MLS.
Okay.
And oftentimes when we were talking with sellers, we would talk about, including the buyer agent compensation within that marketing. And after August 15th of 2024, we are no longer allowed to advertise buyer agent compensation on the MLS. So now what that does is it sets the two compensations apart, if you will.
Okay.
And although I think it's been a little challenging in the beginning, I think this is ultimately leading into something that's going to be really good for both buyer agents and listing agents.
So if part of it wasn't it that in essence, it's always been the way that you could negotiate as a homeowner that what you're going to pay the buyer's agent or even the listing agent, right?
Correct. It's all been negotiable.
Okay. But now it's more defined. Is that a better way of putting it?
I think that's a great way of putting it, Rick. If you're a listing agent, you would want to talk to your seller about what you were going to charge on the listing side of it for your marketing and selling the home. But you're also going to want to talk about what, if anything, that they want to offer as a buyer agent compensation. They can still offer compensation to a buyer's agent. The big thing is they can't put it on the MLS.
But I can find out before I go live, I can find out what, as a buyer, whether the listing or the seller's going to actually pay that commission, right?
That's correct.
And how does that happen if it's not in the MLS?
Agent, your agent would call or reach out to that listing agent and ask them what they were offering as compensation.
Okay, so it's a case-by-case situation.
That's correct.
And I can say, I don't want to pay anything for a buyer's agent. Because that was kind of, I think, when this came out of, 5-6 months ago, the Biden administration was talking about this is going to save tons of money because you won't have to pay the buyer's commission, right? And so I think everybody was going, well, good, I don't have to pay that anymore. Why does that not make sense? I guess is the best way to do it as I'm selling my home.
Well, I think it's all included, in my opinion, in the package of what you do to sell your home.
Right.
And Rick, if you're going to sell your home, you obviously want to get prepared, right? You want it to look great. You want to make sure that everything, if possible, is working functionally in the home. You want to take care of those details. You want to get a great agent to market the home. And then included in that, in my opinion, I think it's a great idea to offer compensation to a buyer's agent. So it's a package deal.
Yeah.
And if you take apart one of those pieces, like as an example, if you decide not to replace the roof on your home and we know that the roof needs to be replaced, that's going to be an issue, right? It's not that you couldn't sell your home with a roof that needs to be replaced, but you're going to have to adjust the price to compensate for that. And so that's where all of this is a package deal.
Right. Well, in the past too, it seems like everybody was saying, well, I don't have to, as a buyer, I don't need to worry about what all the different commissions are because it's being handled by the homeowner, the seller. And that isn't necessarily true. It's kind of a misunderstanding, correct?
It is a misunderstanding because now as a buyer's agent, you have to go in and, number one, talk to your buyer about what it is you're charging.
Right.
talk to them about the fact that the buyer is ultimately responsible. And what does that mean to the buyer?
Right. But it does mean that we've got an issue with, potentially having the buyer have to pay that commission directly, correct?
That's correct. They could.
And so you find your dream home and you're saying, I really want to buy this home, but let's just say they're only offering a buyer's agency commission of 2%. And your agreement with your buyer's agent is 2.8. How does that 0.8 difference get handled?
Well, that's how you would have to talk to your buyer about it. They could be responsible for that.
Or your agent and go, well, are you willing to take 8/10 less? Because I want this house, right? Can you renegotiate it later? Or does it have to, once it's fixed, it's set in stone between the buyer and the buyer's agent?
You could potentially renegotiate it, but if you signed an agreement
right,
that you're going to pay whatever amount, then you either have to negotiate it into the contract to buy and sell, or that buyer is responsible.
Well, my understanding, and this is where it gets a little confusing, is if I put in my contract that I'm going to pay 3%, let's just say, to my agent, the listing agent, and I'm going to pay 2.8 to the buyer's agent, but the buyer's agent has an agreement to only take 1.8 with their buyer, where does that extra 1% go?
Well, that's a great question, Rick. And the reality is whatever the buyer's agent is charging their buyer, they can't charge more than that included in the contract. They would have to amend or change their exclusive right to buy in order to be able to charge more than whatever it is they put in there. So in your example of the 1.8, they can't charge more than that.
And so does the listing agent get that 1% if there is no a change in agreement? Where does that one, does it just disappear? Does the buyer get it? What happens?
Well, that would be in the details of the listing agreement.
Okay.
With the seller. And so I can't really speculate as far as, because it would be specific to that listing agreement.
Right. Well, Camelia, what are you seeing out there since this has taken effect? Have you seen a lot of changes or not?
Well, one thing I really love about being a real estate agent in Colorado is we had listing contracts, buyer agency contracts with a lot of that spelled out already. Everybody knew it was negotiable. I think we see less influx of and confusion in Colorado, as they would maybe say in some other states. But I will say agents, buyers agents, sellers agents, we've been negotiating our contracts deal by deal for as long as I've been in real estate, and that's 19 years. And so I really like talking to my clients when this conversation comes up, what the problem was, where it started, what it was, and how Colorado has really had protective contracts in place with language in place that gave buyers and sellers the understanding of how compensation got paid. So it's an easy conversation to have. I just did a contract last night, actually countered it, and we've been working on it for a couple of days, and commission compensation to agents was part of the conversation, and not unusual. And so I really honestly don't mind that agents are forced to bring clarity in their contracts deal by deal from a national perspective. I think we've been doing it great here in Colorado. I've never had a buyer or a seller that I did not have a conversation around compensation in my entire career. So to me, I think it's just taking a great professional approach across the country and forcing agents and clients to have that conversation. So that's my perspective, but I can give you some case by cases on how it's worked out, or how buyers and or sellers, how those conversations went, if you would like.
Yeah, we'll do that in a second here. Rebecca, what have you found?
I'm finding that there's been some confusion surrounding this. I think that it's been in the press and it's been misconstrued maybe a little bit. So yes, we have always been negotiable on our commissions on either end of the commission. So it has been advertised in the MLS. And I think some agents have been confused. Coldwell Banker has done a great job training us. So we've been very clear through this process of the lawsuit throughout the process. And I've been really disappointed in just the way things have turned out. I'm going to say the National Association of Realtors because I don't want to get too much into the weeds, but I'll say that it's common practice that we've always done this, and it has been clearly defined. And I think that the advertising in MLS wasn't bad because it helped the consumer because the agent knew in advance, and as it was common practice, and I think still is in my experience these last few months for the seller to pay that. There are folks that I've had phone calls, from day one, clients, dinner parties, it's a big topic of conversation all over the news. So the MLS is one thing. So I get it because it is negotiable. It may have put people at an unfair advantage, and we're always about the consumer and our clients. It's also been we've had some unethical agents in our business at times. So there would be advertising that to the consumers that they don't have to pay a commission, and then, or that there won't be a commission. And then when the buyer's agent submits the offer, they ask for it, and it's very confusing to the consumer. All that said, I think that it's been confusing still for people. So for the clients that are seasoned, that have experience, they're okay with everything. I'm seeing it hurting the first-time buyers. They don't have the cash. In Grand County, a lot of folks are second homeowners, and so they're familiar and they might have some extra cash. But the sellers are still pretty much paying it, in my experience.
Okay. Yeah. I mean, and so, Chris, if I'm looking to talk to my agent as a buyer, what should I be asking them? How should I be handling this if they're not bringing it up to me?
Well, Rick, you should ask your buyer's agent, number one, what's the value of using them?
Okay.
So why should I use you as a buyer's agent if they're not telling you? What does this cost? What does it cost me?
Right.
How does this work? How do you best communicate? These are all great questions that you should be asking your buyer's agent. We prepared for this, and as Camelia said, in Colorado, we are a little different, in my opinion, because we've been one of the highest states as far as education goes to get your license for a long time. Ever since I've been licensed for 22 years, this has been one of the more difficult states to get a license in. And our contracts are very sophisticated. And I know because I've talked to agents in other states where that's not the case. But we've been teaching our agents here at Coldwell Banker, number one, how to have the value proposition conversation. And we teach our agents to sit down and have that conversation and a presentation on what it is that you do as an agent on the buyer side to create that value, and then have the discussion of what you charge for it. And so you should, if your agent isn't doing that, you need to sit down and have a conversation with them and say, what is it that you do? And how should I pay? How are you going to get paid? What is it you charge? All of those things need to come up in the conversation. It's really important. Because otherwise you're going into a transaction blindly and you really don't know what your agent's doing.
And if you're talking, if I'm selling my home, what should I be bringing up the same thing? Obviously, you've got all the contracts in Colorado, and as Rebecca and Camelia both said, we've been ahead of the game on a lot of this as far as having our contracts specify it. Isn't it more... It seems like it's more of a perception in Colorado, maybe in other states where they haven't been as clear, a perception than a reality, because the perception was, okay, I just pay 6%. Or I just pay 5%, or whatever it is, because that's the standard. Has that changed, or is it more on how it's communicated?
Well, Rick, I think that's part of the problem with and the reason why these lawsuits have come about is that there were quote unquote standards.
Okay.
And we know in Colorado, or at least at Coldwell Banker, that we have created not a standard, but it's negotiable, and we explain what the value is of what we charge as agents. But that's not the case in other places. And this is part of the whole lawsuit, is that there shouldn't be a standard.
Right.
Just like anything else that you go out and purchase, whether it's a gallon of milk, you might pay a different price at King Soopers than you do at Safeway. And so that's part of this whole issue. And then, of course, as Camelia mentioned, in other states, things just aren't done the way they are here in Colorado. And that's the other part of it, is that it was very hidden in some of these other states where we've been talking about it for years. It's just that they want to get away from the lawsuit is urging everybody, or stating that we have to get away from, number one, using the word standard, because there is no standard.
Right.
And number two, we have to get away from the fact that it's not going to be advertised, and what the buyer agent and the listing agent charge are ultimately separate.
Okay, so it was really the separating of those two and not bundling them, that because it was kind of perceived that the listing agent paid the buyer's agent in the past out of their commission, or that's kind of how I've heard it be explained, when in fact it was never that way really, but it was maybe defined that way. Rebecca, I think you had a question for Chris, right?
Well, I have a couple comments.
Sure.
That do, I love it because his managing broker experience is really valuable. He talks to agents probably 24 hours a day. I know I call my manager broker, 24/7. I want to be clear that also this listing agent's commission has always been negotiable, but that isn't advertised the same way. So I think there's a little bit of confusion that way. So that isn't advertised, but in our contracts, we do have specific areas where we speak to our clients, and we are legally bound to explain this to a buyer before we show them a house. And it comes up and we explain it to them. But there's still confusion about that. And I think I've had a couple of situations where where my seller is offering the commission to a buyer's agent, and then the buyer's agent calls, probably before they show the homes usually, or at the time they're offering a contract. And they would like to know if the seller's agent or the seller is offering the commission. And so we'll get offers depending on that. And, I have had a seller that was willing to offer more than what was asked for. And so the seller just, did not offer that. And I didn't accept that because I had already defined in the contract
what it was going to be. And I think it's also probably, Camelia, a way for people to get away from making this about what the agent's going to make, and more about, you have to define that in the contract, but then let's just go find homes. And then you, as the buyer's agent, right, you're just responsible for finding out. And then that's part of the decision-making process as I'm buying the new home, correct?
Correct. I think that the consumer understands that ultimately, the buyer's responsible for their agent's compensation. I think what this forces in the industry is that a buyer agent is going to work really hard for their client.
Right.
Because if you don't do much for your client, the client's like, well, I'm not going to pay you, whatever.
Right.
I think it forces agents to really step up their game if they haven't already done so. And, real estate's a profession,
Right.
and a lot of agents across the country, and this isn't any career field, not all parties, perform the same duties at the same level.
Exactly.
Your industry, but that's the case. And I think this forces buyer's agents to perform duties professionally and accurately if they want to get paid.
Yeah. And what if I, as a buyer's agent, want to, so my buyer said, I'm willing to pay, or my listing, it's being sold, I'm willing to pay 2.5, and I, as a buyer's agent, want 3. And I didn't negotiate that up front. Can I go to the listing agent and reset that? I don't know. Who wants to take that one? I'm not even sure whether that's a Chris. Okay, Rebecca can take that.
So I had an agent call me up and ask if a commission was offered. And I said yes. And I said, for a full price offer, this is what it is. And it was very generous.
Okay.
So then when she sent the offer over, it was a little more than what we were offering.
The commission. The commission
seller was offering as
right.
commission. Yes. So it goes now in the contract that you're submitting. So it's very good. It's very transparent that all parties are seeing this. So my clients were a little confused because they felt like it was a very generous offer. Everything else was excellent in the contract. So my folks were fine with it, and they just wanted to counter to the original commission that was disclosed to the agent. So she called me up and she was really upset about this.
The agent.
She said she didn't. Yes.
I work with these guys all day long. So, and you do too, and you see how hard they work on both sides, whether they're buyers or sellers. And I think the problem is constant that a lot of agents aren't proving their worth.
This really comes down to having the value proposition consultation meeting with the buyer, going through everything just like you would on the listing side.
Right.
It's been the norm, at least for us for years, is that when we would go out and talk to a seller about listing their home, we would go through all of the things, all the marketing, the tools we were going to use, the ways that we were going to get the property marketed, everything that we were going to do, talk about our communication plan, when we were going to talk to the seller about feedback and all that kind of thing, right? We have to do the same thing with buyers.
Right.
And so we have to sit down and talk to them and say, hey, look, this is what I do as a buyer's agent. Here's all the things that I'm going to do. A lot of this is in the background. You may not see me, spending hours of research at night looking for listings that are going to fit your criteria, but that's what I'm going to do. Here's my communication plan. By the way, let's go through a wants and needs analysis of what is good, for you so that I can find you the best home possible. And because oftentimes when you talk to a buyer in the beginning, they're just saying, hey, I just want to live in this area and I want, 4 or 5 bedrooms. Okay, well, that's a really wide gap, right?
Yeah.
So just going out and looking for 4 or 5 bedrooms in a specific area, well, that's going to be tough. But we got to narrow that down, and that goes into that initial meeting and the meetings subsequent to that to really show the buyer what your value is. I think this really goes back, Rick, to the whole package.
Okay.
Right?
Yeah.
The value in what your home is worth. And again, in a hot market where we're getting 10 offers on a property in one day, well, maybe you don't have to replace that roof. Right.
Oh, that's true.
But you're gonna take a little bit less for the property by not replacing the roof.
Okay.
You're gonna take, and so offering a compensation, you might see some buyers come in there and say, "I'll pay my own agent's compensation in order to get your home," but they're also going to see that they may not pay quite as much for the property. And again, this is a case-by-case basis, but still, it's all about that whole package.
Sure. Well, and also you end up with the issue of you may only get 3 offers because 3 of those agents called and said, yeah, they're not paying me anything. And do you want to pay it? And the buyer goes, no, we'll go find something else. Could possibly the way that it shakes out as well. Camelia, tell me, you said you had a couple of situations over the last few months and how that's worked. How's that worked for you, or what have you seen?
Sure. Well, buyers, when, the contract's always said who, puts in the buyer agency agreement, who's going to pay the compensation. And it's always been in there that buyer could potentially have to pay. And so having that conversation is, I can't remember. I think Rebecca might have mentioned first-time home buyers.
Sure.
When they hear the phrase that you are responsible to pay my compensation, their ears perk up and they're like, wait, what now? So I barely scraped enough money to get my down payment. And so it leads into the let's talk further. Let's talk about the journey ahead, because they have no hindsight. They have nothing, no experience to fall back on, like Rebecca mentioned earlier, versus somebody who's bought and sold for many years, second homes. So I love education. I think that's number one responsibility of a real estate professional, is to educate their consumer. That's how we protect the consumers, by educating them on not only what the contract has in it, what my responsibilities are, but what their options are. And I think understanding options is powerful for the consumer. So when you tell a first-time home buyer, like my young clients, that yes, you're responsible to pay my compensation, and this is what I charge to do all of these duties, to have your back, and then after closing, post-closing, right? This is what I charge. And we're not sure if the seller is going to offer compensation to me. So if not, then I take them through those scenarios. And they become very comfortable knowing what their options are, being able to move forward. That being said, of all the buyers to date from August of last year, when this all came into effect, of all the buyers, I have not had a single buyer say, I don't want to look at homes if they're offering no compensation to you. We would rather see that home, negotiate your compensation, work it out somehow, but we don't want to not see homes. That is an option in the contract. They could say, don't show me any homes that are not offering compensation, because I think they realize there's negotiation options when it comes to compensation. On the flip side, just had a listing appointment. We'll be listing this house in a few weeks, and these are folks I've worked for in the past, worked with them and helping them buy and sell. And, towards the end of the meeting, we kind of got into this whole new compensation ruling and understanding and process. And I like how he started, Mr. Seller started the conversation, this last part of this conversation with, so I've been reading and I understand that I don't have to pay a buyer agency anymore. So I thought, to Rebecca's point, it is very confusing.
Yeah.
Everything is negotiable. And so we talked about what it looks like for a buyer, because they will be buyers as soon as we sell this home. They will be buyers in the market. So when you go to be a buyer, your agent is going to want compensation for their work. And so we really looked at kind of how the strategy, why it all kind of became this seller pays buyer agent. Now, what they got paid was always negotiable, but typically it kind of fell into that pattern, because if you understand it from seller's gonna sell a house, then they have to go be a buyer, right?
Uh-huh.
And so then they're going to buy from a seller who's then going to be a buyer. It's this full circle around. There's always going to be a seller, always going to be a buyer. The monies to be able to pay for the service usually is in profits made on the sale of a home, right? And so everybody is agreeing that when I sell my home, I'll pay the buyer agent. So when I go buy a home, the seller's going to pay my buyer agent. It's just this understood circle of life, right? Didn't hurt anybody. It actually worked beautifully. But what people didn't realize is that the amount was always negotiable. So anyway, I had this great conversation with my client. It's like, well, ultimately, if you don't offer a buyer agent compensation, they're going to write the compensation into the contract somehow, some way, either by asking for it or by reducing the commission. And I did tell them, case in point, I closed a deal where I actually wrote into, so my buyers had an obligation, obviously all buyers do, to pay their agent's compensation, and the listing was not offering a full compensation. So we asked for concession from the seller. The buyers asked for a seller concession, and my buyers agreed that a portion of that would go to pay for what wasn't being covered in my compensation, and the other would go towards helping them buy down their interest rate or for their down payment on their house. I can't remember how that worked out. That was a couple months ago. And it was great. We got the seller concession. My compensation was fully covered. They got monies to help put down on their home. So it's all negotiable, and it all shows up somehow, some way. From a seller's perspective, it's either going to kind of come down to they're asking for it specifically, or they're going to ask for a reduced price, or they're going to ask for seller compensation, seller credit, seller compensation to the buyer. So either way, it works beautifully. The conversations are out there. They're on the table. It's forcing us to really set out what the options are for the consumers. And I think the education piece to the buyer and sellers, although it is very confusing at first, I think when we can clarify and specifically break it down to now you have choices, now you have options, and these are what they are, and spell them out. I think the more clear we can get, the more empowered the consumer feels, and the easier the transaction goes.
What a lot of people forget is deals fall apart, and buyers back out, and the agent has done a ton of work, and they got nothing. They literally got nothing, and on both sides. So I'm listing a home. Camelia and Rebecca have come in, they've staged it, they've cleaned it up, they've washed the windows, they shoveled the walk, and you decide not to sell. You get nothing, and or the agent gets nothing from that, and they are their own business, and so they have to run it as a business. And so, I think it's important that they obviously get compensated because they're doing a lot of work for you. And I think the best part of what I'm hearing is, if everything that came out in this settlement, would everybody agree here that better communications is probably the best thing about it? Is it's forcing communication out of it? Anybody disagree with that?
No, not me.
I love working with agents that are educated and know their stuff and experienced. And I think with 30 years almost of experience for me, I still haven't seen everything. Of course, every deal is different. But I want to get back to, because this is the key, is that we work hard, and we do. It is communication. It's important for us as agents to, for our buyers to understand everything, including how we're legally protecting them. But back to the education piece, in our employment agreement with them, it's all spelled out, and we're on it, and we're really responsible for them, and we have a fiduciary responsibility. So they know that if we're doing a good job. Also, I'm going to say that for the most part, my experience working with buyers, I'm doing a lot more work. Okay. I'm protecting them. They're first-time buyers, or we're writing multiple contracts. Say that, there's 6 offers on a house. I'm in there. I'm communicating with everyone. I'm going to get their best offer. And by the way, I'm doing comps and CMAs on every single one. And so they're going in, and we're doing the inspection. We're consulting all along the way. The roof, we are going in more blind than the seller's agent knows what they're dealing with. They've done everything up front, and the buyer's agent is kind of wondering in some ways. And we're working with the lender, we're working with the title company. Like I can go on and on of what we do with our buyers. And I will say my experience is working harder, more hours with them, holding their hand, because that's my job as to this process. And even if they are repeat clients, this is a different property. Maybe it's an investment, maybe it's a vacation home, maybe it's I don't want to call forever home, but the next
their
rung
primary
on the ladder for them. And legally, I have some properties in California. I sold one recently, and it was kind of a confusing deal because it had to be subdivided, and an investor purchased it. And the records weren't properly, it's a whole thing, right?
Right.
So I called an attorney, and I said, I need to protect myself, especially we have real estate license, so we're even more on the hook.
Right.
And I called the attorney, and I thought, oh, man, I don't want to, I'm paying up front. They've got their retainer, and I do have a real estate attorney on retainer there, but it's a different type of situation with him. So I have a relationship with Coldwell Banker in Granite Bay, California. And Tanya used to do education for Coldwell Banker. You probably remember her, right? And she's the managing broker there. I always stop in, and I called her again, and she's the one that gave me the attorney referral. I worked with her. I worked with an agent. So I don't need an attorney because I feel comfortable with my agents. And she was over at the court, she's looking for records buried. These people work hard, and we work very hard. So I feel very strongly about this.
Well, and part of that is, if from the buyer's perspective, or even from the people selling, is them understanding all the different things that you do. Because when I show up and you're shoveling the decks, and maybe you didn't even communicate that you were shoveling the decks. But if you don't tell them, it's not like I'm bragging that I'm shoveling your decks, but they're like, I think that helps if they know all the different things that you got there 2 hours early and cleaned all the windows or all the mirrors or actually cleaned the bathrooms completely. And I know you guys all do it because I show up and you're doing it when I come to take pictures, and you both look great today, but I've seen you when you're in your getting the house ready stage, and because that's part of the job, is getting the home ready for the sellers, or making sure that you're driving around with the buyers and finding that right home for them. Camelia, do you have anything else you want to add?
The consumers deserve to get their questions answered, and I do. Sorry that it got confusing like it did. It didn't have to. I don't think it had to go that path, but I really think that at the end of the day, the consumer experience is just going to be better.
And yet again, we have Greg Machle from Real Property Management. Hi, Greg.
Hello, Rick. How are you?
Great. And you?
I'm doing well. Thank you.
Awesome. Well, we are always looking for great advice. And one of the things that I'm thinking about is I want to get a rental property, but I want to have the best chance for success. What are some considerations I need to think about?
Yeah, great question. So there's really three things, or what we call three levers, that we analyze when working with investors and are talking about anybody that wants to do anything in the investment property world. So it's location, it's condition, and price. So we'll spend these next couple weeks chatting about those components. The first one we're going to talk about today, though, is location.
And Greg, we talked a little bit about that. We talked a little bit about that last week, like hotspots. But so how is this different this week?
It is. Yes, it's going to be different. Here's what we're going to chat through on this particular piece. You could have a home in one particular market in the Denver area, and that same builder built that exact same home in a different part of the Denver area, and it may command more or less rent, i.e. that location. It may be the literally identical house, built by the same builder, same year, whatever the case may be. Rents for different prices will be on the buy side, will be purchased for different prices, et cetera. So location is something that is pivotally important when you're thinking about investment properties, but it's also the one thing you cannot change. If a builder built a home on the south side of town and the north side of town, you can't just pick that house up and just move it to the west side of town and east side of town, respectively. The location is what it is. So it's important to think through where that location is. And one of the things that we will expand on over these next couple of weeks is this premise of what we call 3-2-1. And from a location standpoint, you're going to want minimum of 3 bedrooms, minimum of 2 baths, in one good school district. That's the location piece, especially that one. You can find lots of 3-2s all over the Denver metro area, all up and down the Front Range, et cetera. But the location piece, school districts, other components, very, very important.
All right. Well, that's pretty interesting. So we'll talk about the other two, price, and what was the third one?
Condition.
Oh, yeah, condition.
Those two.
So let's talk about those in the next coming weeks. And if you're interested in finding out more about them before that, feel free to reach out to Greg at the number there on the screen. And as always, thanks for joining us, and we'll see you next week. At Rockin' Media, we provide you with the best quality photos taken by staff photographers, not contractors, who process your photos individually. We use our proprietary Flash HDR process, which combines the natural look of HDR with the color accuracy of Flash, along with properly exposed windows. Rockin' Media's HDR process is clearly exceptional. Find out more and schedule online at rockinmedia.com. This was a great discussion. I think personally, if you're a Colorado Springs agent and you're not with Coldwell Banker, you should probably look into talking to Chris, because he's a great managing broker, and I appreciate him being on the show today to explain everything that's going on in that whole buyer's agency agreement. I think we're a little clearer. I think the biggest thing is just make sure, if from the consumer standpoint, that you're asking a lot of questions of your agent, so you're totally clear as to how it's going to work. Correct, Chris?
That's correct. Thank you, Rick, for having me on. Thank you, Rebecca, and thank you, Camellia. Awesome job, ladies. And you're always welcome to call me with questions. I'm here.
Thank you, Chris.
And if you want to get a hold of either Rebecca or Camellia, you can do so at the number on the screen. They'd love to talk to you further about this. And if you want more information about real estate and all the different topics that the professionals, also why we call it the Pro Show, have talked about in the past, this is actually our 26th episode, so we've made it half a year, and we're delighted to have Chris on, and Camellia and Rebecca today to talk about this. And feel free to go to theproshow.com to find out more about these various topics we've talked about over the last 6 months, and look forward to seeing everybody back here next week. Thanks.